Hi, this is Dan Whitney with the Whitney Law Firm here in Towson, Maryland. Today we're going to talk about the issue of financing a car loan with a credit union, why it's a good idea and why it's not always a good idea. So, a lot of people have options to get financing, and one of those options is financing the purchase of a vehicle through a loan that you get through the dealer, or providing your own financing, which is oftentimes a loan that you obtain directly through a credit union. So, one of the benefits of purchasing a vehicle with a loan from your credit union is that when you go in to buy the car and you hash out what the price is, you hash out whatever options and aftermarket features you want to buy, then you can either write a check or just provide a check straight from the credit union to the finance manager or the sales manager, and then the deal is done. You don't have to worry about what interest rate am I getting. You already know that. You know what your payments are going to be because you've worked it out through the bank, through the credit union, and you're set. And it cuts down on the area of shenanigans that the dealer has the opportunity to do things with, to cheat you, to forge signatures, to add products. It cuts down on a lot of nonsense. And so for that reason, it can be very beneficial. Now, what goes up must come down. And sure enough, there are some issues with financing directly through the credit union. So I recently had a case about this, and I've had some other cases where this has happened, and I thought this is a serious issue that a lot of people are dealing with, and that's the purpose of the video. So what happened in this particular case is a client purchased a car from a new car dealer here in Maryland, and he financed with a loan he had got directly from his credit union. It was, let's say, $35,000. He gets a check from the credit union for the amount that he wanted to finance, provides it to the dealer, and he thinks he's done, but not so fast. So now he's making payments to his credit union for the secured loan. The loan has been secured by the vehicle. But the problem is this, and this is what I've seen before, and this is what you really need to look out for. 3 months pass, and the dealer does not provide the title to the loan to the bank. They don't get the car registered and titled in the state where it's supposed to happen. So the guy's, my customer's temp tags run out, and now he's got no registration on his vehicle, temporary or permanent, and the title has not been produced. And so what happens is the bank or the credit union starts to call my client and say, "Hey, where's the title? Where's the title?" And of course, he calls the dealer and says, "Where's my title? Where's my title?" And of course, she gets ignored because that's usually what happens once the deal is done. There's no more interest in making any money. And everybody at the dealership figures that time is much better spent selling more cars rather than helping another customer. Of course, not all car dealers are bad. There are a few that are decent in my experience, but I'm comfortable painting with a broad brush, generally speaking, about car dealers, because that's what I see most of the time. A lot of dishonesty, a lot of cheating, and a lot of people getting hurt, and that's why they end up calling me and we end up suing them. But anyway, so what happens is after the bank calls the dealer, so the bank also calls the dealer, or the credit union calls the dealer and says, "Where's the title?" And they get ignored. The client calls the dealer and says, "Where's the title?" He gets ignored. And finally, what happens is there is a provision in the loan that my client took out, and here's what it says. The problem is, if you don't provide the title within 3 months to the credit union, the loan transfer or switches from a secured loan to an unsecured personal loan at a much higher interest rate, and that means his payments went up drastically. Here's what the provision says. As promptly as possible and no later than 3 months, the applicant will deliver to the credit union a certificate of title or other proof of ownership reflecting the credit union as the first lien holder. The certificate of title must also show the individual owner as the registered owner. Failure to comply with this request can result in the credit union converting the loan's APR, annual percentage rate, to the credit union's prevailing unsecured personal loan rate and can increase your monthly payment. And that is exactly what happened. And all of a sudden, what are manageable payments that the client believed would be fine and he was good with, all of a sudden now go up significantly higher. And that causes a problem. So, of course, he reports this to the dealer. "Hey, you're really causing me a problem. I need the title. Get me that title now." And, of course, he's continued to be ignored. So What do you do then? Well, you need to contact the dealer, sue them or otherwise, and work it out. And usually you got to retain counsel at that point. You could file an MVA complaint or a DMV complaint, but that takes a very long time sometimes, although sometimes the investigations are very good. They're very overworked, and that's why an attorney can get to the bottom of things a lot faster usually. So when this happens, and now we've got the customer whose loan is converted to a personal loan, car payments are higher, but there's also other damages because remember, he's making the car payment, which is now higher. He's paying insurance for this car, which because it hasn't been registered is undrivable. He's got to get alternate transportation, so you're paying for Ubers, Lyfts, in this case a rental car for a while. And when things are finally getting worked out, you're able to claim all those expenses as damages, including something called loss of use, which is essentially, at least in Maryland, calculated as what would it cost to rent that same car for the same period of time that you were unable to use it. So for example, if your registration expires and you're not comfortable operating the vehicle illegally, which is a very reasonable way to feel, you're entitled to compensation for the loss of use of your vehicle that you're paying for, whether it's a daily rental, weekly rental, monthly rental. Those all get calculated out and become part of the damages claim, as well as emotional distress arising from the extreme stress, frustration, and all those other feelings that come along with being forced to pay for something that you really have no proof of ownership for, and the situation is only getting worse, and you're getting ignored by the dealer, and you're getting pressured from the credit union. So those are a few things to keep in mind if you decide to finance with a credit union. There's pros and cons. I hope this has been helpful. And of course, if you have a claim in Maryland, feel free to call my office. I'm happy to help if I can. Thanks so much for watching. Take care.